Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon. He's the CEO of Inc. Research. He invented the mid-cap-oriented Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, thanks for having me back, Jim.
Ted, is gold able to hang in there despite all the volatility in the market?
Well, so far it's doing just fine. And we sent out a report to our subscribers and our Canadian Insider Club members at the beginning of the week saying that gold stocks were set to move higher. Now, we're not technical analysts. We're basing that off of insider sentiment, and our insider gold indicator is now back at reached 3-year highs a while ago, which is a really strong bullish formation, and we haven't seen it this high since 2015 when gold stocks were 50% lower. So, in terms of what insiders are signaling, they're saying now's a good time to accumulate gold. When you think of it, Jim, I mean, you've seen the depth now, for gold written over and over again and sounded by so many pundits. It's supposed to have been, hit 1,100 by now, and I've seen all sorts of technical pieces saying gold should be wiped out. But, it's hanging in there. So there must be a fundamental reason why gold is not sort of falling here, given the strength of the U.S. dollar and rising interest rates. There's something else going on.
Copper is really hanging in there, and I don't know why. Is it because there's still a high demand, or are people speculating in copper the way they do in gold?
Well, we've also seen some pretty bullish indications from insiders in the industrial and specialty metals area. Basically, the story, in our view, is that global growth remains intact. Yes, there's good quarters and bad quarters. And yes, we have risk on the trade front from the U.S. administration. But in general, the global economy is bigger than the Trump administration. It's got some momentum, and the momentum, continues to support demand for copper, for oil. But, it's the backdrop, the political and fundamental fiscal situation of the United States that we think is probably supporting the gold price here.
Do you expect the Fed to hike rates more than twice this year?
Well, they might. What's interesting
or twice more
is that they tucked something in their statement about interest on reserves they pay to the banks, and they're not raising that as much. So, okay, just to sort of try and simplify that, yes, they put the overnight rate up, which is what banks have to pay overnight to borrow. But if you're a bank and you have extra money sitting around, now the Fed didn't put up that rate as much. They're not paying people as much to leave money on deposit with them. So basically, these interest rate hikes that are coming down the pipe, they're not quite as strong as they would have been had the Fed not done that. So that's a small gold positive, and I kind of believe it kind of negates any of this, we're going to have an extra rate hike or not, because, what they're giving on, on one side with the interest rate hike, they're taking away on this lower interest rate they're paying on reserves. So it's a bit of a wash, I think. I mean, the real shocker in the market this week was Mario Draghi coming out and saying, "Oh, we're not going to raise rates until next summer." So we'll have this little game in the forex market about how far can we take the U.S. dollar, how long will it go before we start believing that the ECB will start raising rates. So we've got we're going to have some very volatile dynamics in the market in the next few months. And again, I think gold probably has a place in that kind of market environment where you don't know what's going to come out next, whether it's Donald Trump tweet or some data point in Europe that's going to allow the ECB to drag its feet even more. Too many surprises can have meaningful impacts on asset prices, and gold has kind of shown its mettle here, being able to hang in there when a lot of people had written it off.
Is the Bank of Canada trying to keep the Canadian dollar down by announcing lower interest rates, although that doesn't seem to be affecting the mortgage rate?
Well, the Bank of Canada has boxed itself into a nice corner. It doesn't want to raise rates, but it has to raise rates. So what they'll do, I think you might as well flip a coin. I'm not sure. Maybe that's how Stephen Poloz decides at the end of the day whether he's going to raise rates or not. I really don't have a clue what their thinking is, except beyond that they're worried about too much debt, which they've helped create, and now they're worried that if they raise rates, it's going to slow the economy. But they're worried if they don't raise rates, we're going to have significant inflation, which is a possibility. We keep hearing over and over again about how great the U.S. economy is doing. Jim, let's get this straight. The U.S. economy is on steroids because it's running up massive deficits, okay? There's no magic there, okay? Jim, if I were to give you a loan for, let's say, $1 million, and Jim, you don't really have to pay it back. Now, do you think you could go out and stimulate the economy with that? I think you could probably, whether you would stimulate in Vancouver or in Hawaii, is probably one of the few uncertainties with that, isn't it? I mean, and that's what we've got going on in the United States. Now, in Canada, we haven't gone on such a borrowing binge. We have gone into deficit, but it's nothing compared to, on the federal level, what's going on in the United States. Now, we've got wages in Canada outperforming wages in the United States. So, the Bank of Canada, it's really got a problem. It's a problem of its own making, and it's just going to be very interesting to see how it navigates that, and it'll make for some interesting surprises as well. And again, that comes back to gold. You don't know what the Bank of Canada is going to do. I'm not sure the Bank of Canada knows what they're going to do. And in that environment, gold should hang in there.
A new report came out today saying Canadian household debt is down slightly. Is that good news?
Yes, it's very good news. I mean, it's better than going up. And it comes back to some of the things that we've been writing about is that, the Canadian economy is not going to be growing gangbusters, but as long as it's growing, it's helping to mitigate some of those problems. And I don't want to whitewash it and say everything's going to be fine. But if we can get the energy sector to stabilize, and it looks like it's, had some stability here now with the Trans Mountain going through and global demand keeping up, the Canadian economy, might be able to kind of pull a rabbit out of the hat here and keep pace with the U.S. economy over the next 3 or 4 years. We're not going to be able to keep pace with them right now, again, because the U.S. economy is on steroids. Just for the Olympics, the U.S. would be stripped of its mettle, that's for sure.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Ted Dixon. Ted, it looks like, we're entering into a trade war with the U.S. Is there any way Canada could come out on top with that?
Well, no one would come out on top of a trade war. And, I think, again, we're getting back to these uncertainties. And I think one of the key question marks that I have going forward is whether the Trump administration really wants to bring in tariffs because they believe that that's really the way to level the playing field. In the early months of the Trump administration, we were hearing about a border tax, that there would be a tax on all imports, and they decided not to do that because, well, that would be a complete violation of global trading rules. But now we've got these kind of technicalities that Trump has found, these Section 232, where everything's a national security threat and you can raise taxes there. Question is, Jim, is this a bargaining ploy to really try and leverage a better NAFTA deal on U.S. terms and a better deal with China and a better deal with the EU? Or is this something that the Trump administration sees as a way of permanently leveling the playing field? These are two vastly different potential outcomes, depending on what the strategy is. I'm not sure if the Trump administration really has a preference, but I don't know. From the outside, it could be either, and it wouldn't surprise me if we get a NAFTA deal before the midterms. If the fact is that Trump is just trying to leverage Canada into a better deal, but I'm also worried that really Trump is trying to create a blow-up on the NAFTA negotiations for midterm elections so he can campaign saying, oh, those nasty Canadians and Mexicans are treating us very badly, and, you have to elect GOP congressmen and senators because we're going to really stick it to those, those trading partners here in North America. So, we'll have to see how it goes. We'll see if he wants to campaign in midterms on being the deal maker or the deal breaker. Will it be the art of the deal in midterms or the art of no deal? And I really don't know which way that's going to go, but we'll find out.
Some have suggested that this, with his bad-mouthing of Trudeau and so on, that was just a show for North Korea.
Probably. That was part of it. Part of it was probably that's the way he felt at the time. I don't know. And I think that was last week. What's he tweeting about this week, right? So I think one thing we've learned with Trump is that you don't get anchored on past tweets. You just kind of brace yourself for the next one. So, Kim Jong-un was about to be annihilated by Trump 3 months ago with the counterstrike. But, as we saw just this week that, it turned out to be a more like an awards ceremony for North Korea, in Singapore where they were awarded, some very prestigious, time with the U.S. president. And, it was really quite remarkable what we saw. The U.S. is really kind of broken new ground, I would say, with that summit, and maybe a type of summit we never see again. But who knows? Maybe there will be a Trudeau-Trump summit that matches that in pageantry here, in Canada, or who knows? But somehow I doubt it.
Well, apparently Justin has the ear of Trump's daughter. They attend theater performances together. Would that help?
Well, so far it hasn't had much help. I really don't know what's going to be the deciding factor here, Jim. I'm not sure if anyone knows. We're just going to have to see what really the Trump administration is interested in, the art of the deal or the art of no deal. And I mean, I'm hoping it's the art of the deal. I'm hoping that Trump wants to campaign in the fall saying, look, I got to deal with the Koreans. I got to deal with NAFTA, all, better jobs, better, more. I mean, I hope that's what he's hoping to achieve. But, we will have to see. In the meantime, I think that the Canadian market is still quite out of favor with investors because of all those fears. On a 1 year basis, when you keep the currency in mind, we're still keeping pace with the U.S. market. And year to date, it's really a day-to-day thing as to whether it's the U.S. or Canadian market outperforming. So, I think that there's still some good opportunities in areas in the Canadian market that have been marked down because of the Trump factor. You look at our auto stocks, they're cheaper compared to their American counterparts. A lot of bad news has been priced into Canadian auto part companies, and at the end of the day, they're not going anywhere. They're not going to be put out of business. They already have major auto part companies already have operations outside of Canada. So worst comes to worst, they'll just continue down that path. Doesn't mean all that know-how, all that intelligence, all that innovation that these Canadian companies have, that's not going to be taken away by tariffs. It may have to move to another jurisdiction to get around those tariffs, but you can't put a tariff on know-how and innovation very easily. So, people shouldn't get too depressed about what they hear with respect to the outlook for good quality Canadian companies that are trading at low valuations here. It's a real opportunity, but of course you have to have the stomach for it. You have to have the stomach for Trump tweets. But that's usually how when opportunity arises, when people are fearful of the outcomes and they put too much weight on the worst case scenario, which is I think what you're having here in the Canadian market.
Is there fear in BC that Ottawa might impose tariffs on all foreign steel, forcing BC to buy Ontario steel at a much higher price?
I doubt it will get to that. There's always a possibility, but look, the Canadians have not really wanted to put these tariffs on, and they've tried to be surgical about it, but you can only be so much surgical, to such a degree. And, again, it'd be nice to get an NAFTA deal. I'm sure these tariffs would come flying off at that point. But, again, do the Americans really want a deal? That's the multi-billion-dollar question, unfortunately.
We'll have more with Ted Dixon right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, with marijuana about to be legal in Canada, how are marijuana stocks doing?
Well, what we've written about over the past month or so is to our clients is to be very selective on a stock basis with respect to the marijuana space. So there's going to be opportunities there, but I think it's probably time to focus on the stocks as opposed to the broad sector. So you just have to be very careful. There's going to be growth opportunities. So we'll have to see how which stocks prevail. But Jim, in an environment where you have rising interest rates and potentially rising long-term interest rates, that is not usually a healthy environment for stocks that have a long life span in terms of when they start to become cash flow positive. What I mean by that is, if if a lot of these stocks are being priced off of cash flow they're going to generate way down the road, they're going to be vulnerable to that type of environment. So you really have to go with the giants that are being run properly and the innovators that are developing branding that will be able to differentiate themselves. And there's going to be a lot of companies that don't make it either on the branding or on the scale side. So you really got to, you're really betting on management at this point, and so it really becomes a stock picker's market, I think, in the marijuana space. So, that's our view. And also, with respect to opportunities in the Canadian market, the healthcare sector has other opportunities beyond just marijuana stocks. You've got a number of pharmaceutical companies in looking at immune system therapies and hormone therapies that investors might want to take a look at. So there's plenty of potential growth stories in the Canadian healthcare space. They're not all limited to marijuana stocks. So.
Crude oil, is it going to drop or go up in price over the summer?
Yes.
There you go.
It'll probably do both. We're just in one of these market environments where it's so volatile, Jim, and crude oil has seasonal factors going in its favor right now, so it should march higher for part of the summer. But then you've got this U.S. dollar yo-yo in the background. But basically, what we've got are insiders who signaled a number of weeks ago that the Canadian oil patch is a good place right now for opportunity. So we would expect that over the next year for Canadian oil patch stocks to do reasonably well. And we wrote about that in a number of our market reports to our Inc. Research and Canadian Insider Club subscribers. And when you look at our top 40 list that we published at the beginning of the month, and that's also available from our Canadian Insider Club members on CanadianInsider.com, there are a lot of oil patch stocks. So there's good opportunity in the Canadian oil patch, but it's only for investors, of course, who can stomach these ups and downs of the U.S. dollar. And of course, there's OPEC, so that's another ingredient of volatility that oil patch investors are going to have to deal with. But that's pretty much par for the course. Nothing new there. But the U.S. dollar is probably going to be a big wild card for all resource stocks over the summer. That's probably the way the wind's going to blow.
If the Trans Mountain Pipeline is built in 2 years, would that mean Canadian crude would get a lot more money than it does right now?
It's going to give shippers an option to sell over to Asia and to other customers that will access that oil. So it's always a good move. I mean, it's not a panacea. Really, our view is that we're going to have to see continued global growth, global demand for oil. And if that happens, and that's the tide that will lift all boats. The nice thing about the Kinder Morgan pipeline is that it will provide the Canadian oil patch with a few more boats to be lifted, on as global growth it continues. So it's a positive, but it's just one element, I think, of an improving story in the Canadian oil patch. Now let's not get carried away here. We're not talking about a euphoria by any stretch of the imagination, but when you're looking at valuations and you're looking at opportunity, the Canadian oil patch still has a number of stocks that investors can look at that have some good cash flow, that pay dividends that we would find attractive at this point.
Is there still concern the courts could stop it? Because so far out of, I think, 15, 16 court cases, they've all been decided in favor of the pipeline.
Well, anything's possible in the legal system, but the probabilities are in favor of the pipeline. And I think it'd be a shocker if the court stopped it at this point. It'd be a big shocker. Not impossible, but I think there's other bigger risks out there in the world than that.
Ted, is there anything that the insiders have been saying about what they expect to happen in the near, say, 3 months?
Well, we tend to look, 3 to 12 months out. For contrarian investors, gold is still the area that sticks out the most for us. Of course, doesn't mean that we couldn't get a downdraft here in the near term. It's always that possibility. But it's just the way we saw a big spike in insider buying over the past few months suggests to us that there's lots of value in the gold space. There's been lots of value in the resource space. So, Canadian resources, this could be a hot summer for inflation. If it's a hot summer for inflation, it could be a hot summer for Canadian stocks. With
cryptocurrency, there seems to be a new trend where they're actually connecting a physical asset to it. Wine or marijuana, something like that. Do you see that being a new trend?
Possibly. A lot depends on the regulatory framework. There's an issue with any cryptocurrency that trades like a security. I think one of the objectives of attaching it to a wine crate or gold or whatever was to dress it up like it was a commodity as opposed to a security. But when it's up to the regulators to make that judgment, I think there's a risk there. So I think that chapter hasn't been written yet, Jim, and the regulators are writing it, so I'm not sure that's a book I want to read.
Ted, thank you so much for chatting with us.
Well, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website CanadianInsider.com. You're listening to HowStreet.com radio. Find us on Twitter @HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.